Hey, it's Jake. Wanted to do this quick video for you to talk about the California Pass-Through Entity Tax, or PET. Now, this is really confusing, and I wanted to just kind of give you some numbers here so you can make an educated guess based on your option to essentially pay this tax and how it impacts your California taxes and your federal taxes. So I was looking all over for a good video on how to explain this to clients and understand what this actually does and how it makes sense as far as dollars. Couldn't find one, so I'm going to go ahead and make one for you. So essentially, what is happening is California had this new law, AB 150, last year that basically said you can pay a elective tax to basically prepay your California tax return, your personal taxes, and you do it through your business entity. So it's a LLC or a S corporation. And then because your LLC or your S corporation is paying a tax, you have then the ability to deduct that taxes against your federal income taxes because you're taking the deduction on your S corporation. So let me run this through numbers. If that was kind of hard to grasp, let me just run this through some numbers so you can kind of see what this looks like. So in this scenario, I'm going to give you a $100,000 S corporation. So if you're running an S corporation with $100,000, you should be paying yourself a W-2 of about $30,000. This is all generic information. I'm not going to give this specific to anybody. If you want me to run your scenario, I can, but this is just generic information so you can make a decision on whether or not this is good for you, because the payment is due in like 5 days. Like, we've got to get this out the door like right away. So this is assuming you made $100,000 through your pass-through entity in the profits, assuming you paid yourself a W-2 of about $30,000. So the taxes on these, there's federal tax of about $10,000, California of about $3,000. So you have the ability, if you did not pay the PET last year, which none of my clients did. So if you didn't pay the PET last year, you have the ability to do an accrual change. Essentially, what this does is it changes you from a cash basis taxpayer, cash basis business, to a accrual business. And what the biggest difference in those two is that with accrual, you could say, well, we had this tax that was available to us, or that was an option to us during 2021. You say that in 2021 we made the election to pay this tax, which is basically just a board of directors resolution that says we know of this tax, we're going to pay this tax. Of course, that needs to be dated in 2021, and that you're going to go ahead and make this accrual change to elect to pay this tax. Now, this tax is 9.3% of your profits. So assuming your profits are $100,000, 9.3% is $9,300. Okay, so if you make this change, essentially, sorry. So with the accrual change, so I was talking about the accrual change, right? So the accrual change is basically these numbers here, right? So instead of your business, your S corporation or your LLC having $100,000 in profits, it now has $9,700 in profits because you paid this tax, this additional tax of $9,000. And you said, well, Jake, why do I want to pay this tax? Well, essentially, the benefit of paying this tax is that you're prepaying your California personal income taxes. Now, based on this scenario, I already told you that your California tax based on this scenario is about $3,000. So if you pay this $9,000, you now have you are basically prepaying your California tax, which is due, I'm just going to put it right here, this is due 4/15 of 2022. So then you have the ability to prepay that. Now you can see you have a credit or a carryover. So is this a good thing for you? Maybe, maybe not. When we look at the higher numbers, it'll definitely make more sense. But if you're in this scenario, you could see, well, why would I want to pay $9,000, but I'm not going to get the benefit of that, $6,000 of it, basically 2/3 of it, for another 2 years, right? So assuming you're going to have the same profit next year, another $100,000 next year in 2022, then you essentially say, okay, now I have this $6,000 carryover. Now I'm going to carry that into next year. So next year, your taxes would have been $3,000, and now you've got $0 in taxes because you prepaid them. Okay. I hope that makes sense. Now you can say, well, Jake, so let's talk about this accrual change. So the accrual change basically changes you from cash basis to accrual basis. There's a lot more complications to that, right? So we've got to make sure that that's a good idea for you or not, because you've got to go through quite a few things, especially if you have inventory, depending on how your business is, if you have, money that's coming in as far as, prepayments or deposits, that's changes between cash and accrual. So it's not just, an easy change. There's quite a few things that changes with it. And the tax form, the 3115, to do the cash to accrual change is kind of complicated. So hope I didn't lose you with that. Come on back to me if I lost you with that. So if you decide to do the accrual change because you did not pay the PET tax last year, then essentially, wait, let me say that again. If you didn't pay last year, but you do the accrual change and you pay it this year, you can then reduce your income taxes, right? This is for the business profits. We're reducing that by the amount that we paid in that tax. And you can see the federal tax goes down. So it goes down from 10,000 to 8,000. You basically save, 1282. Not a whole lot. So you might say, well, is this worth it for me? Well, maybe it's worth it to you to save $1,000. But to do the accrual change in the 3115 form, it's really complex. And could take a lot of time. So you could say, well, Jake, let's not do the accrual change. Let's do it without the accrual change. And essentially what happens is you can still deduct this $9,000 payment that you made because, again, this is the tax based on $100,000. And then you can essentially use this as a carryover. So you can still pay it now, which is due by 3/15, but then you can go ahead and use the deduction next year, right, during 2022, because we're paying the tax in 2022. So essentially this is being aggressive, pushing that payment into 2021 when we first learned about this. Or you could say, no, let's not be as aggressive. Let's not do the accrual change. It's going to be complicated. Let's just take this deduction that we have, and we're going to take it in 2022 when we actually change it. So you still get the cash, benefit here. The California's taxes is still essentially being prepaid, if you will, but you can see then the tax benefit that you're getting, right? The savings that I told you about. So changing from here to here, the savings is not going to happen until 2022, right? So you're not going to realize that savings for another 12 months or during the next 12 months as your taxes are accumulating and because of the profits you're earning in 2022. Okay. So I hope that makes sense, right? Where if you're not doing the accrual change, you're just going to realize those benefits in 2022. Is that a bad thing? No. But like I said, is you kind of have to make the decision now within the next 15 days because you have to pay this $9,000 before 3/15 to be able to do this, whether you take it for next year or you take it for this year. Okay. So, maybe you're making a little bit more money. Maybe you're in the 300,000. So in the 300,000, this is where it actually starts to get interesting. So now you can see here, $300,000 with a W-2 of $90,000. So you're basically taking home about $400,000 from your business. If you do the 9.3% on the 300,000, it's 727,900. Let me just check my math. That's correct. Okay. Now the California tax on this $39,000 of income, federal is 83,000, California is 27,000. Now, here's what's interesting. See, this 27,000 is very close to this $27,000 right here. So if you're closer to the $300,000 range versus the $100,000 range, this makes a lot more sense because you can go ahead and pay this 27,900 in this scenario. You're going to pay this in the next 5 days, but you're going to that prepayment of your California taxes goes against your California tax bill. Like I said, this tax bill right here is due 4/18 of 2022, which is just in about a month, right? About just a couple of weeks away. So the prepayment makes a lot of sense because you're basically going to have this bill, right? This bill of $27,000 in just a couple of weeks anyway. So you're paying this elective tax now instead of paying this personal tax bill, and then you're getting the benefit for it. Again, if you want to be aggressive and you want to do that accrual change, then you're going to save that $14,000 this year. If you don't want to be as aggressive, you don't want to do the accrual change, and assuming you didn't make that PET payment last year, which most people didn't, then you can just go, hey, let's go ahead and just take it in 2022, and your federal taxes $69,000. You can see here the difference, 83 versus 69. And again, you're taking the deduction, this $27,000 deduction, between, instead of taking it here in 2021, you're taking it here in 2022. Okay, so I hope that makes sense. So is there any less benefit to do it? Not really, because the benefit to you was, so if you do the accrual change, yeah, you're getting it right away. But should you not do it if you don't take the accrual? Well, no, because you're still going to get the benefit for it. And this is gonna last for, probably at least 5 years. So if it's going to last for the next 5 years, basically think of it as you're taking the deduction now, and it's going to be benefiting you for the next 5 years. And if it goes for the next 5 years, then in year 6, you'll be able to take, as assuming you're going to continue growing your business at the same rate or higher, you're going to, pay these out for the next 5 or 6 years. Well, then you'll get essentially one more year doing it this way versus these guys that are doing it this year, right? So yeah, they're getting the benefit because they're saving $14,000 now, which is sooner than later, but there's definitely not any downside to taking it into 2022, not doing the accrual change, right? Not doing the accrual change, because you're going to go ahead and get it for one more year in the back end. Cool. Hope that makes sense. Like I said, a lot of numbers here, big decision to make. If you're in the $100,000, not as big a savings, right? Is it worth $1,000? I don't know. But when you start to get the 300,000, when you start to, like, cash out for your business $400,000, you're gonna make this tax payment anyway. You're going to make, just go ahead and pay this instead of this. It's going to go ahead and reduce your California taxes, right, to basically zero anyway, which you got to pay them, make that payment anyway. And you're getting a $14,000 benefit for doing so anyway. Cool. So I hope that makes sense. I hope you stayed with me through the whole video, and thank you so much. And I will see you on the next video.